Welcome to the Deep Dive. Today, we're digging into the first quarter results for 2025 from Kinross Gold Corporation. We're using their recent news release as our main source here.
Yeah, and the idea for this deep dive is really to pull out the key takeaways for you. We want to understand what drove their Q1 performance and, what it might signal for the future without getting totally swamped in detail.
Okay, let's dive in. The first thing that jumps out is, well, just how strong their financial performance looks for Q1 2025. Seems like a really good start to the year for them.
Oh, absolutely. The numbers really tell a story. Their attributable free cash flow, it more than doubled compared to Q1 last year.
Wow.
Yeah, hit $370.8 million, up from about $145.3 million. That kind of jump, it really shows they're converting that higher gold revenue into actual cash very efficiently. Gives them flexibility.
Right, flexibility for, well, whatever comes next investment, shareholder returns.
Exactly. And it's not just the cash flow. Look at their margins.
Yeah, I saw that. A 67% increase to $1,814 per gold equivalent ounce sold. That's huge.
It is. And what's interesting, like you said, is how much that outpaced the gold price increase itself, which was 38%.
So they're not just riding the gold price wave. There's something more going on operationally. The margin back in Q1 24 was what, $1,088?
Precisely. It points towards, better efficiency, maybe better cost control, something driving profitability internally. And you see it in earnings, too.
Mm-hmm.
Reported net earnings basically tripled. $368 million or 30 cents a share. That's up from $107 million or 9 cents a share last year.
And adjusted earnings followed suit.
Yep, more than doubled as well. $364 million, also 30 cents a share. Strong numbers across the board.
And operating cash flow looks solid too, right? Around $597 million.
$597.1 million, yeah. Up significantly from $374.4 million in Q1 24. So financially, a very positive picture.
Okay, so what's behind all this? What are the key drivers?
Well, the CEO, J. Paul Rawlinson, put it down to continued strong operational performance and disciplined cost management. Pretty standard stuff. Let's unpack it.
Right, looking at the specific mines helps. Paracatu, for instance, they had a solid quarter.
They did. Benefited from strong grades, meaning more gold in the rock they processed, and, interestingly, improved recoveries.
Recoveries meaning how much gold they actually get out of that rock.
Exactly. And it looks like that new gravity circuit infrastructure they put in is really helping boost those recovery numbers. A clear return on investment there.
Okay, good example. What about Tasiast? That's a big one for them.
Tasiast also performed well. Again, strong grades and better recoveries, helped by optimization work they've done at the mill.
Now, wasn't there a fire there recently?
There was, yeah, at the mill in April, so after this quarter ended. But Kinross has said they don't expect it to significantly impact their annual production guidance for the year.
Okay, that's reassuring for their outlook then. Fort Knox, increased production, lower costs. What's the story there?
Fort Knox is getting a major boost from the Manh Choh project. That started contributing in the second half of last year.
Ah, right. Manh Choh.
Yeah, the ore from Manh Choh has higher grades, better recoveries. And since Kinross owns 70% of it, that flows through nicely to Fort Knox's results, especially free cash flow.
So when they say attributable figures for Manh Choh, that's referring to their 70% share.
That's exactly it.
Yeah.
It clarifies their direct slice of that project's performance.
Got it. Now, the report did mention lower planned production at Round Mountain and Tasiast. How does that fit in?
Well, that just highlights how mining works. Production isn't always flat. Mine plans involve moving through different ore grades at different times.
So lower output in one spot can be planned and balanced out by strength elsewhere.
Precisely. It shows the benefit of having a portfolio of mines and good planning. It's not necessarily a red flag when the overall company performance is this strong.
Makes sense. Okay, so they're generating all this cash. What are they doing with it? Sounds like returning value to shareholders is a big focus.
Definitely seems to be. They announced a regular quarterly dividend, 3 cents a share, payable in June. And maybe more significantly, they've reactivated their share buyback program. They already bought back $60 million worth in Q1.
And they have a target for the year.
Yeah, they're aiming for at least $500 million for the full year, assuming, gold prices stay strong and operations keep humming along.
Which is a pretty direct way to boost shareholder value, taking shares off the market.
It is. It signals management's confidence and rewards investors directly.
So beyond just shareholder returns, how's the overall financial health, the balance sheet?
Looking very solid.
Yeah.
They paid off the last $200 million of their term loan. That reduces debt, increases
I
flexibility.
didn't move.
Yeah, and their cash pile grew too, up to nearly $700 million, $694.6 million actually. Plus, their total liquidity, counting undrawn credit lines, is around $2.3 billion.
That's a hefty safety net. And it seems like rating agencies notice.
They did. Moody's just upgraded their outlook from stable to positive. They kept the buy 3 investment grade rating, but the positive outlook is a good sign.
And Moody's reasoning.
They pointed to the debt reduction, the company's scale, low leverage, meaning not too much debt compared to earnings, and just generally conservative financial management.
Okay, so that potentially makes future borrowing cheaper and signals lower risk.
Exactly. It's a vote of confidence.
So strong present, but they're also clearly looking to the future with development and exploration. What's happening there?
Yeah, the pipeline looks active. Great Bear in Canada, that's a big one. The Advanced Exploration Program, or AEX, is moving ahead. Construction, earthworks are happening, engineering's almost done.
An exploration focus?
Well, after drilling the LP zone pretty heavily, they seem to be shifting focus a bit now to explore the wider regional potential of Great Bear. Looking for more discoveries, basically.
Suggests they think there's more to find. What about in the U.S.? Round Mountain.
Round Mountain Phase X in Nevada, yeah. The exploration tunnel, the decline is progressing well. Over 3,900 meters developed now.
And the drilling results.
Still looking good. Infill drilling is confirming strong grades and widths. They even gave an example. One hole hit 98 meters at 4.2 grams per ton gold. Promising stuff for a potentially large mine.
Definitely sounds encouraging. Curlew Basin, also in the U.S.
Yeah, Curlew's also showing positive signs. Drill results keep indicating better grades and widths, supporting the idea of a high-margin operation there.
High margin potential is always good.
Absolutely. And they've actually restarted underground development there to chase potential extensions of the ore body. Again, they highlighted a strong drill result, 25.7 meters at 7.8 grams per ton gold.
Wow, okay. So a lot of focus on North America for future growth, it seems. Any updates elsewhere?
Well, in Chile, the Lobo Marte project is moving through baseline studies needed for permitting. That's still on the cards as a potential large, low-cost mine down the road.
Right.
And back in the U.S., Bald Mountain Redbird is mining on schedule, and they're studying a potential Phase 2 expansion there, too.
Yeah.
So, yeah, projects at various stages across the portfolio.
Good spread. And it's important we touch on sustainability, too. They mentioned that.
They did. Their full 2024 sustainability report is coming out later this month, their 17th one.
Right.
And they highlighted some specific community work, like finishing the second phase of a hospital renovation in Paracatu, Brazil, doubled ICU beds, added isolation rooms, real tangible benefit.
That's good to hear. Anything else on that front?
Yeah, also a new 5-year partnership with Lakehead University in Canada. Research focused on geology, mining, environment, involving indigenous communities too.
Right.
Relevant for Great Bear especially.
Demonstrates that broader commitment beyond just mining. Okay, let's circle back quickly to the financial tables in the release. Any key numbers worth highlighting again?
Well, those summary tables are useful for that direct year-over-year comparison. We already talked about cash flow and margins, but you can see the gold equivalent ounces produced and sold, the production costs.
And the realized gold price jump is stark there. $2,070 last year to $2,857 this Q1.
Big difference. Their all-in sustaining costs, or AISC, did tick up slightly though, from $1,310 to $1,355 per ounce sold. But still, margins expanded massively because of the gold price.
And the mine-by-mine summaries just flesh out what we discussed earlier, like why Tasiast production was lower.
Exactly. Lower grades mined at Tasiast as per the plan, partly offset by better recovery. Paracatu up due to higher grades and that improved processing. Fort Knox up, mainly because of Mont Cho's contribution. It all adds up.
And that term attributable is key again for understanding Mont Cho's specific impact, reflecting that 70% ownership.
Right. Unless they specify attributable, the main company financials usually consolidate 100% of Mont Cho since Kinross operates it. But the attributable numbers show their direct economic share. Good distinction to keep in mind.
Definitely. And finally, that section on non-GAAP measures. Why should you pay attention to that?
Well, companies often use metrics outside standard accounting rules that's non-GAAP to show what they see as underlying performance, maybe stripping out one-offs. But because it's not standardized, they have to show you how they got there from the official GAAP numbers. That's the reconciliation. It provides transparency and lets you understand the adjustments they're making. Crucial for analysis.
Absolutely. Okay, so wrapping up our deep dive on Kinross Gold's Q1 2025, it really looks like a very strong quarter.
No doubt about it. Big jumps in free cash flow, margins, earnings, driven by good operations and obviously helped by higher gold prices.
And they're clearly focused on returning capital via dividends and buybacks, while also pushing forward those future growth projects.
Yep. Advancing Great Bear, Round Mountain, Curlew, and others, all while keeping that balance sheet looking pretty healthy.
So that leads us to a final thought for you, the listener. Given Kinross's strategy balancing shareholder returns with investing in these big development projects, what do you think are the most critical factors for them to sustain this momentum through the rest of 2025 and beyond?
Yeah, especially thinking about, how volatile gold prices can be and just the inherent risks involved in actually running mining operations day to day. Lots of moving parts to watch.